Yo, what's going on, guys? It's Killer. Welcome back to the channel. Now, it has been a while since my last upload. Matter of fact, it has been a month. And the reason I haven't uploaded in a month is simply because we haven't done anything worth updating. And every time I create one of these videos, I usually update because I see something happening, see something changing, or just basically to update my overall stance of the market. And as of now, my stance hasn't changed, right? In regards to my higher time frame thesis, I am obviously bullish on the higher time frame. I'm in my 2x swing long from 62.6, and my notional spot average is around 65.7k. So you can see the price is slightly below my average, and today I'm going to be covering some of the confluences which I have brought up on my X in a bit more extensive detail. As always, it's a lot more easier for me to explain via a video my entire thought process rather than writing paragraphs of text on X, which usually get buried when I do multiple posts throughout the day. So these videos just serve as a more extensive, in-depth analysis overview of my entire thought process. So, starting off with my current plan, I believe we're in that range-based capitulation, right? I believe that we could be very well around this area here where Bitcoin goes through this choppy range before having its leg upwards. And the reason why I believe for us to be within this lower region is quite simply because we have had a meaty part of the correction. And some of the other confluences which I'm going to cover on the different pages I will get onto to validate this point. But in terms of my overall expectations, I believe that this current range we are in is going to be the best buying opportunity on the higher time frame, right? Now, could we see sweeps below the 57k region? Yes, we could. Theoretically speaking, we still have 1.5 to 2 months left of this bear cycle, meaning within that period we could see more sweeps below this wick low. Now, the reason why I haven't put sweeps below this wick low on this initial example here, because I can also see a possibility where our base low has already been formed and we don't have to necessarily sweep the wick lows. And the only way to validate that happening is if we keep ranging above the 60k region for the next 1.5 to 2 months, there is a very good chance we end up front running the lows like what we saw down here before pushing upwards. So that's something we need to observe. So putting it simply, if Bitcoin continues to range above the 60k region for the next 1.5 to 2 months, then there's a very good chance based on the timing of events we end up pushing upwards without having that sweep. On the other hand, if we manage to get more sweeps into this lower boundary, then I would definitely look to buy some long-term spot for Bitcoin. Now, based on my timing and what I expect to happen after this bottom formation has occurred, I expect us to be above 80k around the Q1 period of next year, where I expect us to have this leg upwards, and we are going to be trading just below this 82k region in Q1, which is approximately around 5 to 6 months from now where Q1 starts. Now, I believe we are going to get above 83k, have them deviations, sweep the highs, come back down and form somewhat of a similar range to what we saw last cycle, where Bitcoin had the initial impulse, had a range form below the significant swing low. In this case, it's around this price region here, the 75s to 80k's region. We form a range for the next couple of months around this area before having that initial impulse to new highs. And I expect this range to be around that 80k region, right? We maintain below this area and then we start having that leg upwards later through Q3, Q4. So I expect Bitcoin to range below the 80k region, have reaccumulation before expansion towards the upside, which again is likely going to be around that Q4 area, where I expect Bitcoin to be above the 100k region around this November period here. Now, to cover my thesis as to why we could be in that bottom end formation and why we do not need to see a sweep below the previous wick low, is because this initial example below us is the 2022 bear cycle, right? We had that initial significant low. We had the initial significant low. We broke below that low, had deviation, had the first initial retest towards the upside, which is we have the capitulation wick, the initial retest, and this was below this low here, and we did have a low form around the 20k region here before breaking downwards, right? Very similar to what we saw around this price region. Then once we've had the initial retest, we come all the way back down. In this case, we came all the way back down. Then we had the initial rally itself. And at the moment on the lower time frame, this is essentially what Bitcoin has done, and we're seeing a small rejection from this price region, similar to what we saw around here as well. Now, this is a very far-fetched scenario, but I do believe it's worth paying attention towards, just because of the similarities of what's happening now versus obviously 2022. In this case, what we could see here is a push all the way back down to the 61K region on the local time frame. Now, if we reclaim this area, start pushing right back up and ranging, if we do something very similar to the last cycle where we keep ranging above that 60K region, the moment we get back up to this price region, that would be equivalent to this area here. Do not look for shorts on this initial move. And the reason is quite simple, because if we spend months of ranging in this area, fail to sweep the wick low, we can easily do something like what we done in 2022, where we front run the significant lows and start pushing higher beforehand. So this is a scenario I am observing as well. Remember, we still have 1.5 to 2 months left of this bear cycle, meaning theoretically speaking, we could easily come right back down, break the low, sweep the low, have somewhat of a three drive pattern before pushing right back towards the upside. So again, just scenarios we are observing here. There's the scenario of not sweeping the wick low, we have consolidation above, start pushing to the highs, and then start having that push towards the upside through late Q4 into Q1 next year. The other scenario is just simply having a sweep of the lows, forming another base low, and then starting to push upwards. It doesn't take away the fact that buying around these areas long term is going to be very good entries. Moving on to my next initial chart. Now, this was a chart which I posted on my X, and I think it's very relevant to cover this because it's covering near enough every single bear cycle, the mechanics, and obviously how Bitcoin is moving through the different cycles. Now, if we start by looking at 2014, we obviously have the top, which is being formed of every single cycle: 2021, 2018, 2022, and 2026. Now, after forming and establishing that top, we have our first initial impulse which breaks structure. This is what I call the test dump for Bitcoin, where we have that top formed and we have that significant push towards the downside. Now, after this test dump is formed, everybody is usually panicking. Everybody is usually expecting, okay, let's see if we can get a retrace. And this is where the push towards the upside starts to form, where we have our first bearish retest after breaking structure of that trend. And in this case here, we can see we had the test dump, we had the wick, and this is where complacency forms, right? This is usually the part where everybody believes we are back. Everybody believes the trend has continued after having its bull market retest, which is natural because when we are in an uptrend for 3 years, people expect every retest to be bought up. But eventually, when the trend shifts, there'll be a retest which doesn't get bought up, and the trend just significantly shifts. In this case here, we had the test dump, and then the complacency wick high forms, something which we see in every single cycle. We saw it in 2014, 2018, 2022, and again in 2026. And remember, I brought this up when we were around this price region. This isn't something I observed after it happened. This is something I observed before it happened. We took shorts around this price region, right? And we caught this entire move downwards, right? So this isn't something I'm covering after it's happened or after the fact. This is something which I'm covering based on something I was positioned on. Now, after we form the complacency wick, this is the substantial lower high before the market starts pushing downwards. In this case, we have our second leg towards the downside, our second leg as seen in 2022. And in this case, we saw the same thing in 2018. Now, in 2018, we see something slightly different. We formed a higher low instead of breaking the low, right? So this is something worth noting here, is because not every circle needs to be the same. All we are simply marking and establishing are the significant swing highs before lower. This was our complacency retest. This was our push downwards. Complacency retest, push down, complacency retest, push down, and push down. So basically, what I'm saying here is after the complacency wick has been formed, we start pushing downwards, and that's seen in every single cycle. In this case, we saw after complacency, we pushed to a new low. We saw that in 2022, 2026. We still pushed down in 2018, but we didn't form that low. However, after the complacency wick, we saw that that marked the significant high before the significant low. So after we start legging downwards, we have the dead cat bounce. This is what forms after we're about to have the last final retest of the bear cycle, where we have the push towards the upside before the base formation forms. In this case, in 2026, we had the dead cat. We pushed all the way towards the upside. This was our final retest in my eyes, where we see a significant high form before that base formation has occurred. In this case, we had the final retest of last cycle, then the bottom formation extension occurred. We had the final retest of 2014, and then we had the base formation occur directly after the final retest, which was the significant lower high before lower prices formed before obviously correcting towards the downside. Now, if we compare that to where Bitcoin is now, we had that final retest, we swept the previous wick low, and now I believe we are in that bottoming formation. So this is something also worth noting for Bitcoin here, right? Based on how we are always going through a 1, 2, 3, 4, 5 correction, forming that base and then pushing towards the upside. Now, if we start pushing downwards again and start getting to that 40K region, well, what does this mean? Well, it means we're going to be doing something slightly different from every other cycle, right? Because if we look on my next chart for Bitcoin, which is only observing the test dumps, in 2026, we saw one significant low, two significant lows, three significant lows. In 2022, we saw one significant low, two significant lows, three significant lows. So basically, these two scenarios so far have been practically identical. Now, if we observe the next scenario, we have one significant low, two significant lows, three significant lows. And the significant lows are marked by the certain phases of what the market is going through. So you're probably wondering, okay, but we have a low here, but we had another low here. Why is this one not being marked? The reason why is because we are paying attention to the phases of complacency and the retest, which is why this low wasn't marked. But if we're essentially paying attention to what happens here, we form three lows, usually every single cycle through every single phase. We saw it in 2026, we saw it in 2022, we saw it in this cycle of 2014, and we saw it in 2018 as well. The three lows are the substantial lows of each part of the cycle and the psychological aspects of the phases, right? So based off of this as well, it reinforces the possibility of our base low already being in, and we could already be in a similar range where Bitcoin is right now around this price region. So that is why I believe buying around here is very good long term. If we do see deviation and have a push lower, then that would mean we form four base lows, something which we haven't necessarily seen in every other cycle based off obviously complacency, the final retest, and the bottom in formation. We have not seen four substantial lows, which makes me believe that if we do see any retest below 57K, this is simply manipulation below the range into expansion, not another range where we see some time-based capitulation around, but manipulation below the lows before expansion. So that's my current thoughts regarding these two charts. Now, again, if we start looking at another little subtle confluence here, is this cycle has been slightly sped up from the previous cycle, right? We had a very similar redistribution range seen in the 2022 bear cycle, which was around here, right? But if we start paying attention to where that occurred, we have the start of the year, January, start of the year, January. This range formed after the start of the year, right? So we ranged for approximately 3 to 4 months before that breakdown, right? The high was formed in April, whereas if we look in the 2026 bear cycle, this high was formed very close to the start of January, 3.5 months quicker than the previous range. Instead of this being formed after the yearly open, it formed before the yearly open, which is another subtle confluence to observe here because it means that the redistribution range happened quicker than this range here, showing a potential shift in the seasonality of what happens during certain periods. In this case, you would have expected the range to form around here and then start pushing downwards again, but we didn't. We formed that range high at the start of January, and that occurred in April of last cycle, meaning that if we formed this range sooner, could we form the lows sooner this cycle? It's definitely a possibility, which I'm also observing as well based on the data alone. Lastly, before we wrap up the video, again, I just want to cover my overall plan at the moment. So I am in a 2x swing long position from 62.6. My invalidation on this trade is 31K because again, it is a 2x leverage position. My spot notional average is around that 65K region. I will be looking for acceptance above the 80K region, where basically I'll be looking for some reaccumulation before expansion. And basically the idea for me is to long my longs the more price action we get. So we long the lows, we look for that trend shift. Once we see that trend shift, we look for that reaccumulation. Then we long the breakout to expansion to that 110K region where I expect during Q4 next year. Then between this period, I will obviously be looking to distribute some of my bags, maybe look for some scalp shorts around this price region through the bull cycle. But again, I'm looking at the 140 to 160k region, significantly higher towards the upside. Anyways, that is my overall thoughts on the market. Whether we see manipulation below the low is still going to be determined in the next 1 to 2 months. If we do not, then obviously it doesn't matter. But if we do, I would buy this aggressively. It's because I believe we are very, very close to the bottom, if not already bottom. So they're my current thoughts. Hopefully that helps, and I'll catch you guys later.